In the software, we've always handled debt as a fixed overhead expense. Now, one of the problems with that, remember, we've always stated that your profit and loss statement will lie to you every day of the week. And the way that it does that is in one of the ways, rather, is if you look at debt. Anything that goes toward principal payment shows up on your profit and loss statement as profit. It's not recorded as an expense. Remember, that's a balance sheet item. Well, in the Planning for Profit software, we account for that entire loan payment because we want to make sure that you're charging enough per hour to not only cover all of your expenses, but to make all of your loan payments and still have some profit left over at the end. We've put a little bit of a spotlight on debt at this point in the software. Again, prior to this, what we've always done is we've just had a cost input category of fixed overhead expense. Right, so when I go in and take a look at that, we would simply look at fixed overhead expenses and we'd enter our loan payments there, right? So for example, in this case, I've got a truck payment, pick it monthly at $600 per month, $7,200 per year. And it's allocated into the software that way. The problem with that is it just now simply sprinkles and blends in all of our debt throughout all of our financial reports. We wanted to show you exactly what it's costing you to have that debt, or to be carrying that. And so what we've done is we've now added a new cost input category. Right now you'll see it's showing up here. Right underneath variable overhead, we've got a debt cost input category. And what this gives us the ability now to enter in all of our debt in one place. So anything that you previously entered under fixed overhead expense, you can remove that, and we're going to enter it in under debt. If you're creating a brand new model, all of your debt goes in here. So this would be any loan payments that you have for any vehicles, any general business loans that you have. If you have a line of credit, I'd want to put that in here. Remember, your line of credit, basically you're only recording the interest portion of that. And so if you've got that line of credit that's up there, put in some principal amount in there so we start bringing that balance down. If you have any past due payments with any suppliers, that would go in here because, again, your standard pricing doesn't cover any back payments or any past due payments that you need to make. So all of that stuff would be considered debt. Now, the debt category for cost input works exactly the same as the fixed overhead expense does, in that to add a new one, we'll simply come in here and we're going to say add a new debt. Once we click on that, we'll get the input screen that puts up. And so this would be a past due balance with great HVAC supply. Got it? How much are we paying it? Well, we're paying it monthly, right? So I'm going to leave that as monthly as my option, and my goal is to pay $5,000 per month until we get that balance covered. Right, so again, I can see it's putting that into every single category. The expense category automatically defaults to loans because it is a loan. And then last, we still need to allocate that expense. Where are these dollars going to be coming from? So in this particular case, I'm going to put 50% on each department, because half of it is for supplies, half of it is for materials. And once we've done that, we can go ahead and accept that expense. And now at this point, it will add that new expense monthly at $5,000 to my list. Now, the other thing that you'll notice is when you start looking at your reports, as we go into the reports themselves, this category, right, so I'll look at my profit statement as an example. And as I scroll down, you'll know that we have all of our variable overhead expense shows up. Underneath that, we have all the fixed overhead expenses. And now you'll see a new area where we have all of our debt showing up in one place and how much of that is being allocated to this individual department. So in this particular case, I can see those dollar amounts per hour that are being allocated to this given department. Now, the other thing, the same thing shows up in our monthly cash flow. As I scroll down on this one, we also then have the debt category, and we start to amortize that out per month in our individual report. And last is on the field labor summary. In the labor rate analysis, let's get the right report there. When I look at my actual labor rate breakdown, you will start to see, again, a debt category there and how much per hour is going to cover debt. So right now, in this particular case, $27.23 out of every single hour that I bill out in this particular department is going to cover debt. Get all of your debt into that debt category. Know what it's costing you per hour, because as you pay off that debt, all of that flows to the bottom line in terms of profit.